Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day, and on today's episode, I'm joined by Dave Collum, a market commentator, professor of chemistry at Cornell University, and some might say conspiracy theorist. Much like myself, we're going to discuss why he thinks we could be facing a 40-year bear market up ahead for the broad market. We're going to get his thoughts on the potential for gold revaluation, whether we'll ever get an honest audit of the gold reserves in Fort Knox, the rift occurring between the US and the EU over the war in Ukraine, whether Mark Carney will cause carnage in Canada as the new Prime Minister, and so much more. Get ready to dive down some rabbit holes. I hope you'll enjoy this conversation with Dave Collum. Dave Collum, great to have you back on the show. I want to start with a question that I ask all guests. It's been a while since we talked. At this moment in time, what are the main themes and trends you're watching when it comes to financial markets, the economy, geopolitics, wherever you want to take it? What do you think more investors out there should be paying attention to?
Rumor has it the markets are getting a little beat up. I have an allergic reaction to the concept of a correction, where people talk about some 20% correction and then it bounces right back. And I go, well, look up in Merriam-Webster what the definition of correction means, and it says it fixes something. And so if you go down 20% and back up 20%, you fix nothing. It's like if you fill your tire with air and then it's flat again, you fix nothing. And so that's a good metaphor. I have the market so highly overvalued that a real correction would A, bring the markets down and stay down, and B, that would be at least a 50% drop over an undisclosed period of time, which I would love to be fast, but the dip buyers will come in and negate that. So it's going to take some time to beat it out of the investors. They have to get demoralized. They have to stop buying the dip. And so that takes time. Time is duration is your enemy. There are a few people who understand this. I just watched a Porter Stansberry interview, which you should interview Porter. He's got a.
I did. I had him on the show not too long ago, and excellent insight shared in that conversation. Yeah.
And his he even calls himself the big huckster sometimes. I mean, he's got a great sense of humor, and he's got this brutally straightforward delivery. So in any case, so we are just starting a process, if it has started, right? To declare the death of something, like the death of this, this, I would say, 40-year bull market. You're only right once. And so to declare the death of something is an improbable prediction, but at some point this 40-year bull market will roll over, and I think we're going to go through decades of ups and downs. Someone called it a kangaroo market. He says that a bull is up and bear is down, and the kangaroo market does this. I kind of like that. I think that's what will take it out of the souls. That'll rip the souls of investors out. And so my concern is duration will kill me too, because I'm not buying expensive assets. People come up with ideas. It's a great idea, but it'll be a better idea later. And so there's a lot of good ideas I have. In fact, Porter goes that route too. It's really interesting how much I aligned with Porter. I actually gave my case for a 40-year bear market, bear being a 40-year market where it just goes nowhere for 4 decades. It'll go up and down, of course, but actually make no progress for 40 years. At an investor conference where was his inside team plus 2 outside speakers, one was me and one was Meb Faber, at his farm in Maryland, and under a tent. It was a tent revival meeting. So we do align. I don't think he got his ideas from me. That's not the implication, but we do align a lot. So I think this could be the beginning. I mean, I'm optimistic. How's that? I'm optimistic that doom is coming.
Hey guys, a quick break to hear from today's sponsor, ARC, Silver, Gold, Osmium, and to let you know all about the special that they are offering at this point in time. which are 2023 silver kangaroos, 1 ounce coins, mint fresh at only $2.07 over spot. So be sure to reach out to owner of ARC Silver Gold Osmium, Ian Everard, today at 307-264-9441. You can also contact him by email at ian@arcsgo.com. Make sure to tell him that Commodity Culture sent you. Once again, silver kangaroos, 2023, 1 ounce coins, mint fresh, $2.07 over spot. Well, supplies last. And now back to the episode. Yeah, I like that. I mean, we do need, I think to align with what you're saying there, we do need a bear market at this point. However, I wonder, you were saying that when people come to you with ideas, they're too expensive at this point in time, they're going to be a better idea later. So at this point, are you an adherent of keeping a decent amount of cash on the sidelines? And if so, what are the sectors or companies, what are these ideas that you have that you're watching in the hope of picking them up on sale when the dust settles?
Well, so you can buy a stock with a PE of 10. There's nothing that says it can't become a PE of 5. Right, let's go with that. So when the market was at its PE low in 81, it was a PE of 6. Half the stocks were below 6, and so if you buy a stock on the drop and it's got a PE of 10, it can cut in half from there. And if it cuts in half and stays down there, you're going to be collecting a lot of dividends before you get your money back. And you're really going to have to be patient to get your money back. So what would I do if I start nibbling at the market, which is going to take tens of percents further lower before I get serious? I could imagine a couple of ideas that I have, like platinum, for example. I'm looking at with great interest. I think the EV story is imploding. What a lot of people don't know is hybrids use more platinum than ICEs, internal combustion engines, and so if we stop at the hybrid, which I think looks like the happy medium, it looks like the technological net gain where electric vehicles don't to me. Then the demand for platinum will be robust, and platinum right now is supplied by South Africa, which is a potential failed state depending on what happens there politically, and Russia, which is, we've done our best to piss them off, although Russia could open up fast with Trump in office. Then I would think platinum at some point would get pretty good. It's been dead money. I mean, flatline dead money. Error bar of 2% dead money for about a decade. So I actually just sent a DM off to one of the really prominent technical analysts, because I'm not a technical analyst, and said, looking at the PPLT chart, what would pique your interest? What price would pique your interest? I kind of I don't want to sit on dead money for another 10 years. So I'm waiting for a pulse. I'm waiting for the flat line to go beep. Then I'm going to go, okay, now I'm pushing some chips in. I could do that against the grain. But buying energy equities, for example, they could go lower. Once the selling starts, once the steady flow of passive investing starts reversing, and Mike Green says it's starting to roll over, which is not about investors getting nervous, but rather just investors getting old. Or investors moving to active management or something. I don't know what, but once the passive investing story rolls over, they could get really ugly and really relentless. And so you kind of don't want to get in the way of that. So I don't believe in this idea of timing the market. Timing the market for me is getting out of the way. And it's very hard to get back in. I understand that. Once you're out, you are at great risk of missing the train. So timing, getting back in is tricky, especially if the market jumps out ahead of you.
We'll talk about this thesis you have for a 40-year bull market, the presentation that you gave at a tent with Porter Stansberry. Maybe if you could break that down for us and exactly what it is you're seeing that led you to that conclusion and how you think such a scenario could play out.
Well, I'm getting good at doing this fairly quickly. The 40-year bull market starting in 81 the valuations, which are a metric in which you divide the price of the market divided by something that it ought to correlate with, what's really critical is both are inflation sensitive. So price to revenue, price to earnings, price to book, price to whatever, they're both moving with inflation. So the first thing you got to realize is that inflation does not solve an overvaluation problem. What it does is if you have an overvaluation and inflation runs high and all of a sudden you're getting crushed by the price of things going up, that overvaluation gets uglier because now your price to return almost nothing, your cash flow squat. And so inflation does not solve the overvaluation problem, it exacerbates it. So with that said, in 1981, the price earnings ratio bottomed in a very, very big way. And I understand why. Inflation was scary. Russians were selling us resources for pennies on the dollar because the Soviet Union was trying to stay alive. And we'd say eventually failed, but they were trying. China started selling us labor for 20 cents an hour, prices. The boomer demographic hit the streets. They not only showed up, but they brought their wives. And interest rates were at 16 and they dropped to zero over the next 40 years. And what Buffett told us was that dropping rates, long-term dropping rates, are where bull markets come from, and long-term rising rates where bear markets come from. Low rates are not bullish. Low rates are the end of the chain. When rates are finally low, you got no more dropping rates. And so rates went from 16, 17 down to zero. And so there's this huge tailwind. So what did that tailwind create? Well, if I'm right about valuations, which I've tried to steelman this to see if there's some argument for why valuations should trend. I don't think so, because if valuations get higher and higher, then the cash flow you're buying gets lower and lower. So if you want to get a 10% return, you better not pay above a sort of PE of 10, because if you bought a bond, you know what it's going to kick out, and if you buy a bond that returns 10%, you just bought 10% return. If you buy a stock with a PE of 50, you just bought 2%. And you can hope for earnings doublings and profit margin doublings, and I don't think any of those things are going to save you. So what happened? Well, it turns out during that 40-year period where everything was perfect, I mean, that's just an amazing series of tailwinds. The valuations which should not trend, let's take the CAPE. The Case-Shiller price-earnings ratio was bottoming around 7. It's 38. Now, the Case-Shiller price-earnings ratio from 1880 to 1990, which I consider a good baseline. If 110 years doesn't establish a baseline for something, I don't know what does. It just wobbled back and forth, as I said it should, and it averaged about 12. So 7 was dirt cheap in 81, 12 was average for over a century, and we're at 38. So I put us, let's call that, crudely speaking, a 200% overvaluation. Now, to get out of that, if you assume, and this is arithmetic, if you assume that GDP is going to grow 2.5%, I think that's optimistic. If you assume it's going to grow 2.5%, and you assume that this S&P 500 is going to track the GDP, because that's where the P is coming from, right? And I think that GDP is being overstated because inflation is being understated. So there's that problem. Then basically you're going to grow your equity base by 2.5% plus dividends, which is going to give you about a 4%, which is exactly the number Buffett says, which is exactly the number Ron Grice says that you can expect to get in an inflation-adjusted basis, 4%, not including taxes. Now, you include taxes, it's now no longer 4%, right? That's a problem. And so if you block and tackle your way forward, and you look at just the capital gains that I would say are a metric of GDP growth, it'll take you 45 years to grow your way back to fair value, historical average valuation. Now, the path is unknowable. It could go up and down like a yo-yo, like a kangaroo, right? But I think if we have regressed to the mean, not through it, 45 years from now, it'll be at exactly the same price, inflation adjusted. I think it's fourth grade math.
Very interesting. Do you think that commodities will also take part in this 40-year bear market? Do you think that they could outperform? Because we hear this narrative all the time about when the broad market eventually rolls over, we'll see a flight of capital into real hard assets, the commodities super cycle story. Do you think that's a possibility, or do you think commodities get hammered in that situation as well?
Well, I do think it's a possibility. I mean, commodities did really well in the noughts while the normal equity market got crushed. So yeah, I think they can fight it. So I think the commodity story is not a bad one, but I think the commodity story may have to wait until we finish getting our asses kicked, right? So if we go into a pretty serious recession, and as Porter said, I'm portifying here. He said that there's just no way we're going to get out of this debt. He says this debt is not we can't cut our way out. We can't grow our way out. There's going to be a problem. We're going to hit a wall. We're going to hit a bridge above it. The next downturn could be pretty ugly, and I don't mean downturn as in like 6-month downturn. I think we could really end up in the sort of a Great Depression sort of downturn. That it's possible the commodities is the play to come out of it. I don't know. I'm not buying anything right now because I just think everything is going to get hit. I'm having the best year I've had probably since the late 90s, where I'm up. My portfolio is up something like 12% year to date, right? Everyone else is getting their ass kicked.
What's in the portfolio that has yours up 12%? Well, a lot of gold.
Gold.
Great. That's a great segue into the next question, which is on the gold markets. Obviously, gold, people buy it to protect their purchasing power. People see it as a safe haven asset, etc. Performance has been fantastic as of late. Silver actually has been performing quite well also, but silver bugs want to see that $50, $100 silver before they're satisfied. What are your thoughts here on the gold market and also these hot topics that have come up regarding gold, the auditing of Fort Knox and the U.S. potentially valuing its gold reserves? Is this all smoke and mirrors? Could this actually happen? I'd love to get your thoughts there as well.
Twitter's full of experts.
Yeah.
I should not profess to be one of them. The story, there seems to be something real happening. I'll accept that. This idea that sourcing large quantities of gold, there's both a demand to source large quantities of physical gold and difficulty doing so. Now, I've been in gold since the late 90s, and so I've lived through an awful lot of these stories that gold's done well, but all these fancy stories about we're on the cusp of something grand have all turned out to be untrue, right? There was always going to be some big event that's just going to cause gold to go to the stars, and it's done well, but it's never what they say it's going to be. And they're always on the cusp of it breaking out in some big grand way. So I will wait and see. It does appear as there's some disturbances. There's a tear in the universe, and something's going on. And is it just some big money? Maybe central banks, maybe BlackRock for all we know, right? They got enough money to buy up a lot of gold. The gold seems to be moving from London to the COMEX, but I don't know if that's just a transitory move or if it's then heading east from there. I don't know the path gold follows, but it could go from London to COMEX to China because that's the best way to do it or something. I don't know. Gold went from London to the COMEX in 2020 when the market tanked too, and no one seems to really explain that. So that seems to be real and really hard to understand to me. The auditing of Fort Knox, there's apparently 3 big sources of gold that needs to be audited. The guys like Elon talk about bringing a film crew in and filming the gold. That's like Geraldo Rivera's, opening Al Capone's vault. That's just stupidity. Right, that's just dumb at the highest order because, and I don't know whether these claims are correct, but people say you could bring an army of auditors in and an army of metallurgists in, and you would spend years auditing the gold. And supposedly there have been attempts to audit it in the past, and they make very slow progress. I just heard someone said they audited, they started auditing it. And then what you're supposed to do is seal the vault up that you just finished auditing, so that gold is safe, sort of like a monster box. It hasn't been opened, that sort of thing. And then they started opening it. So you go, okay, so they're stealing gold from there, maybe, who knows, right? So I don't think we're ever going to do it. And so I think calling for it, I think if you walked in and you filmed it, it would mean nothing, because you don't know ownership. So you don't know if the gold's good. Remember, you might not, you're a young punk. About a dozen years ago, they were talking about gold being in one of these depositories that was flaking. Now, gold doesn't flake, right? Fake gold flakes. And I remember some numbnut and some Wall Street bank that said, well, does it really matter if it flakes or not? And I'm going, only if you actually care if you own gold, and that just shows you how absurd. So much of Wall Street is dominated by 20-somethings who have no idea what they're talking about. And you read some article that says Goldman says, well, it was some numbnut in the cubicle at Goldman that said it, right? Goldman doesn't have a voice. It's a company, for Christ's sakes. So they're not going to audit the gold. That's my opinion. They can send a film crew in. If they do, then it's a hoax, because they'll find it. It'll be there. But as Rickard said, it might not even be our gold, but they're not getting it back. So, I don't even know how to think about that stuff. I would love to know how much gold China really has. China's an interesting story. I think the gold story, if it really busts open, is going to be a BRICS story. Right? Someone's going to put gold behind a currency.
And how about revaluing the U.S.'s gold reserves currently at $42.22?
Tell me how. Okay, so walk through that, and I'll start asking you questions. What does revaluing do? How do you revalue it? Where do you start? What do you do?
Yeah, I would guess you would value it to current market price. You would market to market.
Okay, so now we have 8,100 tons of gold that now is marked to market. And now what does that do?
It doesn't offset much, because the
debt
and deficits are so huge.
No, but what does it offset at all? We know it. Well, let's say we know we have the gold. We've always known we had the gold. We've known it was at $42. We could price Yosemite National Park at $5 trillion, and it would achieve exactly the same thing.
Okay. Yeah.
So but what if people talk about revaluing like to $30,000? How do you do that? Does someone stand up and say, gold is now worth $30,000? I go, okay, well, and I'm married to a trophy wife now, but it's not true. So I don't know what that even means. Gold can't be artificially revalued unless you're on a gold standard. You have debt written in gold, denominated in gold. You say, oh, by the way, or denominated in dollars. You say, by the way, we're going to pay off our debt in dollars with gold. But if our debt's in dollars, they don't want gold priced at $30,000. What does that mean? It seems like a lot of nonsense to me. It seems like a lot of people really just don't know what they're talking about to me. And I don't either. But I do know bullshit when I smell it.
Yeah, I think marking it to market wouldn't be the most dramatic move, but I don't think 30,000 doesn't make sense. It wouldn't do a lot. It might temporarily raise the value of gold. Do you think such a revaluation would cause the market to react?
You've got a calculator on your computer. You can tell me the value of gold if we've got 81,000 tons, right? You punch in the number of ounces per ton. You punch in the dollar value per ounce. You go, oh, it's worth this much. I don't. And if you then say, okay, now we're worth $8 trillion, what good does that do? Now, if on the other hand, you start borrowing and your collateral that you're using to borrow is in gold, and they can take possession of the gold, that's different. But we're not going to do that. We're not going to open up the gold window to sell to foreign entities again, like we stopped in 71, right? They're not going to bleed us out of our gold.
Well, I want to switch to the realm of geopolitics now, something I always love discussing with you and getting your take on. And I want to talk about the rift that's developing between the US and the EU at the moment over the war in Ukraine. The EU is talking about spending $600 billion to boost their military capability in the face of Putin's expansionist ambitions. Is this a realistic proposition in your view? And even if they had the money, I mean, how long would this take, and what would the implications be? Is there that many people who want to put their boots on the ground and actually fight at this point?
So bear in mind that my primary source is emails, podcasts, Twitter, and Zero Hedge, right? I mean, I think it's all a bunch of bullshit. I think that what would be much more likely than the EU putting all that together would be the complete busting apart of the EU. I think if I had to make some big predictions, I'd say I think NATO is going to be gone in a couple of years. They might recreate something to replace it, but I think NATO in its current form may be gone. It's just a guess. But if the United States says, screw it, we're done with NATO, is it still NATO? No, it's some subset of NATO, which is tiny, monetarily speaking. The Europeans are notoriously bad at working together and notoriously good at shooting each other. And so to think that somehow Europe's going to unify around a war and have it work out well. So I don't think, Britain's got an army of a total army of something like 70,000 troops. And they're going to send how many to Ukraine? And when those limeys start coming back in body bags, the public's going to accept that. How? Right? That's not, it just seems, so it seems like just malarkey, blarney, whatever. It seems like just a load of crap that the Brits are putting out. They've got their own problems. They wouldn't know a civil liberty if it bit them in the butt. And the idea of Europe working together has always been a risky model, right? The creation of the EU is kind of like super gluing together some countries that may not want to be super glued together. So I think a higher probability bet of them working together as a unit would be them busting apart.
So you think that NATO could eventually, or perhaps even more rapidly, cease to be the organization that it is today. What about the EU as a whole? Do you think we're going to eventually see the dissolution of that block of countries starting to exit? I want to point to something we were discussing before we hit record today, which is the protest, riots, etc., happening in Romania over the so-called far-right candidate being barred from even running for the presidency. We've obviously seen the AfD in Germany rise in prominence, and so threats have now come out there saying that they might eventually be eliminated from the ballot box. There was attempts to overthrow the election results in Georgia.
Describe, and this is a legit question. This is not a rhetorical question. Describe to me the Romanian party's far right views. What are the three most important planks that make them far right?
This particular presidential candidate has very strong Orthodox Christian views. I believe that is now considered far right in today's world.
Shoot me now. Yeah. Okay, what's number two?
Number two would be that he wants to put Romania first, and he doesn't want to play along with the EU.
Shoot me again, right? He's starting to sound like Viktor Orban. Okay, number three.
Number three. I think that would be it. He's anti-establishment. He's very family-oriented. At least that's what his platform is.
This guy sounds awful.
And supposedly,
awful.
But according to the EU, he is collaborating with Russia. Of course, that's what that's one of the excuses they'll use. There has been misinformation spread online by the Russian government that has allowed him to gain popularity. I mean, it's just insane at this point where this is all going. So I'm wondering, it seems like the European elites are kind of set on destroying democracy to save democracy. How do you think this will all play out?
I think that you will bust apart. You've just described an unstable system. right? So a guy who supports family values, religion. By the way, I used to call myself an atheist, but that's too harsh a term because I believe that religion serves a very important gluing role in society. I just personally don't want to participate. But I'm glad others do because I think it's a positive force when done in moderation. How's that? Family values, looking in the mirror and seeing Romania number one, to call that far right, you got to be a goddamn commie to think that's far right. So as far as I'm concerned, and I've been following this Romanian story casually, and in part because trying to understand Europe is just one notch above trying to understand the Middle East. And it seems as though there's a half a dozen countries that are all facing existential risk. Right. Here's an interesting question. Isn't Germany's economy a mess, right? Is that an accurate statement? Yeah. Why is the DAX going exponential?
Yeah, that's very interesting.
Right. The DAX looks like NVIDIA.
Yeah.
It went up yesterday, I think. I mean, it's just insanity. And so here's a country that's turned off their sources of energy. They're falling apart. They're a bunch of tree hugging wackadoodles, and yet their index is soaring. That's going to stop. That's going to blow the hell up. And by the way, it's not going to survive a blow up in the U.S. Let's go there. I don't think the pressures. Money, by the way, doesn't flow. Whenever anyone talks about money flowing from point A to point B, that's not how it works. So if I have, for example, shares of NVIDIA and I sell them, people talk about money flowing out of NVIDIA. Well, someone bought them. So there's no money flow. There's no change in the bank accounts. So I think of these asset classes, including cash, as like these balloons that are vying, they're expanding and contracting, but the air between each balloon is not flowing. The balloons are just expanding. And so let's say the world's worth 100, let's say there's $100 trillion of money, call it whatever M number you want to call it, in the world, just round number. And let's say the equity market's worth 100 trillion. What that says is at that moment in time, that investors want 50% equity, 50% cash. Now, if the equity and if people say, "Oh, I'm kind of optimistic about equities. I think they're cheap." What do? Well, they start bidding up equities. There's still $100 trillion worth of cash, right? Forget about the role of central bankers, how much they screw that model up. Let's just assume central bankers aren't doing anything right now. The $100 trillion worth of cash will bid up equities, and they will rise in price. Let's say you say, I want 60-40 equities to cash. Well, the 100 trillion is not moving. It's 100 trillion. It's not moving. And therefore, they're going to have to bid up the equities to 150 trillion. And that'll give you your 60-40. They say, oh, that was really good. I think I want 80-20. So as the market collectively increases its equity exposure, in theory, the percent of equity is dictated exclusively by the numerator. Now, where do central banks come in? They fuck with the denominator. They shove money in hoping that that'll push up the numerator. But money doesn't flow. There's no cash on the sidelines. There's always cash on the sidelines. So if I buy NVIDIA, you sell NVIDIA, whatever, there's no cash involved in this. My cash becomes your cash, vice versa. And so these are stupid concepts that I remember I was at a bear market chat board. We worked through this little idiosyncratic bit of thinking probably 25 years ago while we're waiting for the dot-com bubble to burst. There was a bunch of us just chatting. We said, we sort of intellectually worked through it. Said, money doesn't flow. This is nuts. Now, again, there is creation of money by creating debt. You create money, things like that. And so the denominator and the equity to cash ratio does change, but it shouldn't probably, right? That's the depreciation of the value of the money, right? If it was gold based, it wouldn't change. The equity to gold ratio would be that denominator would be a goddamn brick, right? And so, but they don't want to go to gold. They have to have, the governments have to have inflation. I sold a violin the other day for my son. I owned it. He played it. That we bought about 8 years ago, and we paid 16, and I sold it for 28. By the time I'm paying a capital gains, by the time you account for inflation, I lost a lot of money. So in theory, I shouldn't have a capital gains tax because the capital gains tax ought to include an inflation adjustment. But it doesn't because they tax the inflation. So the inflation is a tax and they tax the tax. And so during a deflationary economy, let's say equities didn't move and deflation made them more and more valuable. You can't tax deflation. There's no capital gains tax on a deflationary system. So you need inflation to have assets go up in price so that when you sell them, they can tax the difference. The other thing I think that the inflation numbers are so bad. What do you think inflation is relative to what they claim? What percent higher is inflation in your opinion?
I think you could look at shadow stats as a good barometer.
So where's that? How many percent above the stated inflation does shadow stats put you at?
I think it's approximately around 10%, I would think right now.
So let's say they're too pessimistic. Let's call it 7%. So inflation is then 4% or 5%. Right? So inflation is so if you call inflation 7%, and the GDP is growing at 2.5%, then to the extent that you've got a 5 or 6% error in your inflation number, you got a 5 or 6% error in your GDP because it's inflation corrected, which means your GDP is shrinking by 2.5%, 3%, 4%, which means we've been in recession for years. For years, we've been in recession. You go, well, you can't be in recession for years. Well, you can't in an inflationary economy, but the British Empire went through a century of dropping GDP, is my understanding. So yeah, you can be in a recession for decades. Just ask the Soviets. Just ask anyone whose economy just got suckier and suckier.
Well, I wonder if you have been following the political situation in Canada recently. We have a new prime minister now, good old Mark Carney, who seems to be the absolute face of globalism. No input from the citizens, of course. Old Trudeau stepped down. I don't know if Mark Carney is better or worse. I think they're pretty much interchangeable. The next scheduled elections are in October, but I think a lot of damage can be done before then, and who knows?
How did Carney get that position? How did he actually get it?
It was voted in by the Liberal Party. I believe Liberal Party members voted on who the new leader would be.
What gave them the right to vote him in? Was that because that's Trudeau?
Exactly.
Is Trudeau the Liberal Party? I can't even keep track of that shit. Is Trudeau Liberal Party? So because the Liberal Party members stepped down, they get to choose the replacement.
Exactly.
They chose Mark Carney. Okay, so they went from Bozo the Clown to Darth Vader.
Exactly.
Right? Good move, guys. Boy, you guys really did a fine job. So yeah,
I think he could potentially win the next election. It's possible, but whether legitimately or otherwise, I mean, Canadians are on average not very intelligent people when it comes to this type of stuff. Just look at their reaction during COVID to kind of get an idea of where the Canadian mindset is at. It's kind of like do what the TV says, believe what the TV says, and anybody who's kind of a dissident voice, you try to bully them into compliance.
Well, I don't know
that's the mindset of it.
I don't know how that's different than America, the U.S. I think we did the same thing. Canada was a little more extreme.
Well, I think they were way more because I think the U.S. there was around 50% of the population who was kind of against regulations. Is that a stretch, or do you think?
I think that's a stretch.
That's accurate.
I think that's that's accurate lately, but I don't think it's accurate during the peak.
Right. Got it.
I think during the peak, everyone signed off. Most everyone. Canada was more extreme, so you couldn't even go across the border. So the big extremes were Canada, Australia, and New Zealand. If you had said 10 years ago, if you have to, and Israel, if you said to me, if you got to leave the United States, where would you go? 10 years ago, I would have said Canada, Australia, or New Zealand.
Yeah.
Right. I would not have said Israel. Let's put it that way. And so yes, Canada's a dumpster fire. They haven't even won a Stanley Cup in about 30 years, I'm told. So their reason to exist has been removed. So someone calls them snow Mexicans. That strikes me as a bit of a crude description, but snow Mexicans. Yeah. No, I love Canada. The United States supported the truckers like 97%, yet they still mowed the truckers down. That was the same it was the same period where they were mowing down J6ers, they were mowing down truckers, they were mowing down. We really should bitch slap those people who did that. We should not, we pardoned the J6ers. But I don't want to stop there. I want Trump to dig into that and find out who the hell, all the bad things that happened as part of that story, and really put a bat to them, really a real Louisville slugger to their sorry asses. Because I found that to be one of the most treasonous moments in American history.
Well, Dave, this has been a great conversation. For everybody watching, we're going to dive into some more controversial topics we can't discuss on YouTube over on Rumble. So just search Commodity Culture on Rumble. That video will be there as well. But for now, Dave, for people who want to hear more from you, where's the best place to go online?
Twitter. David B. Collum. Oh, I tell you, I have something coming out. Bob Moriarty, every year, for reasons that are unclear to me, takes my year in review, which is my pinned tweet and is free, and modifies it into a book form. He pays for his guy to do all the modifications, and then they create a book, and then they upload it to Amazon. And the only thing I have to do is there's some point where they send me a link and they say, click the upload button, and I hit click, and then up it goes to Amazon. So if somehow free is too cheap, and you want a hard copy of the book, I think it'll show up within a week or two on Amazon, and I will sell at least 2 or 3 dozen copies.
That's awesome. What a good guy Bob is.
Well, I love it. Wait a minute. Hold on. So here's here's the 2022 version.
Awesome.
This is actually a binder, and I buy it. It's free at Peak Prosperity, but you should buy it on Amazon.
That is awesome. Yeah, Bob is a friend of this show. Had him on several times and always like talking to him. And that's really cool. Well, I will put a link below to your X account so people can follow you there. Of course, people should be watching out for your book. Dave, it's been an awesome conversation. I'll see you over on Rumble where we will dive into the deep, dark recesses of some rabbit holes and continue the conversation.
I know where you're headed.
And thank you for joining us today. As a reminder, this episode is brought to you by ARC, silver, gold, osmium for all your precious metals needs. Head to arcsgo.com. Contact owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com. Make sure to tell them that Commodity Culture sent you. Once again, the special is Silver Kangaroos 2023 1 ounce for $2.07 over premium, mint fresh, while supplies last. I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.